Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for October 1st. New month and still same old market, right? So I hope everyone had a wonderful weekend and are right back to work here today. Quickly, before we jump into the day that was, looking ahead to earnings tomorrow, we do have PepsiCo and Paychex coming out before the open tomorrow. So it might be something for us to keep an eye on. Obviously, PepsiCo is a pretty good-sized company. Paychex, no slouch either, both S&P 500 companies. So nothing major, but do have a couple of S&P companies with earnings before the open tomorrow morning. Kind of an interesting day in the market. Kind of saw a gap up on the open over the rejoice of the trade deal, and then really just kind of flattened out and kind of sold off. It really, it's a good gap to the upside, so that's a positive. But there really was very little to any follow through in a lot of areas after that gap. So here we see, of course, the S&P ran up. I mean, remember, anytime we see these candles with these long wicks, at some point they were at the top and the bottom, right? So at one point we were threatening, resistance on the S&P before really selling off. Now, certainly that isn't a bearish reversal or anything like that, but we would have liked to see some positive momentum, just a small green candle, right? Seems like maybe bulls got a little ahead of themselves and got slapped back down to reality for the day. But again, we're overall in the same upward trend. Things are still very solid, technically speaking, from the S&P. Besides, other than we really had a flat day. That doesn't mean we've changed trends or anything, right? So over on the NASDAQ, very similar. Held, sold a little bit more, but really just kind of ran into that resistance level and drifted off. Held its own. I'm not unhappy with that. Honestly, I kind of prefer that. It's hard to get into some of these breaks if they're too extended. So even just a day or two below the breakout point can do wonders in my mind. So, but very bullish still. We are at some pretty high points in both the S&P and the NASDAQ, as we can see. So we do want to monitor that. But that is just kind of a swing high over here on the NASDAQ. But we certainly have to always respect resistance. Over on the Dow Jones, very similar, big gap up, probably the nicest of them all. Ran up towards those highs, sold off, and really spent much of the day selling off before closing in the green. Of course, closed in the green, but a lot of selling on the intraday. But again, with all of these charts, nothing has changed technically. Of course, we do want to watch out for that overhead because, as we saw in all of these indexes, resistance is sitting right above us. So that's something that we do want to monitor, no doubt about that. Russell, on the other hand, it did not have such an exciting day. I guess unless you were a bear. And of course, I would argue that you should have been nothing or a bear. I argue nothing would have been fine too. Of course, we broke down last week, tested it the last couple of trading days last week, ran up into that 1700. I think we hit 1703 at a high point very, very briefly and smacked back down. That was not a good showing. We're not surprised because we knew that 17 was going to be tough. So no surprise that it was. And then it really pushed us down, closing near the lows of the day. Pretty darn close. Very bearish, obviously, development over in the Russell. Now we have even more confirmation that money is just not only not coming into the small caps, but it's also coming out of the small caps too. So we want to monitor that, be careful with that. Of course, from a bullish point of view, at least, very bearish development, in my opinion, at least, for the Russell. Now, remember, again, anytime we look at these patterns, it might rally up tomorrow, and that's fine if it does. It shouldn't break resistance, right? And so sometimes we get a little worried, and I get it, if it doesn't just go straight the way we want it to. But to always try to remember what's the pattern I'm trading, that really helps hold your trades together. Over in the material sector, a nice pop on the open, really strong showing, much like the broad market, sold off of the intraday highs and kind of closing somewhere in the middle of the day's trading range. I don't think really anything has changed over here when it comes to the material sector. We're really in the same spot. We knew we were really extended to the downside. We knew it was eventually going to have some sort of a bearish rally. Whether or not you were willing to buy into that rally, that was your call or my call, but not terribly surprised. It's still showing certainly some weakness in this sector overall. and certainly a little bit of a sell-off off the daily high. In energy, again, we sold off the high, but we closed pretty strong at the same time on the energy sector as we continue to hold this breakout point. We are working towards some old levels of resistance. I would argue that we're close enough to start thinking about that resistance level, but we still are in very good shape overall. We are holding that breakout point, and really, I think that's all you can ask if you were full. But very strong movement over in the energy sector today. Keep an eye on that resistance, but we are certainly seeing some good stuff over in energy. Finance, not so much. Much like the material sector, it kind of took off early. Unlike the material sector that was able to kind of hold its gains, really the financials had one heck of a hard time doing that. Holding onto that support level by maybe thread, not a great looking chart. Again, very extended to the downside. I wouldn't be surprised to see some profit taking from the shorts will lead into some potential short-term upward movement. But I wouldn't trust that short-term upward movement personally. That would be more of a retracement type situation I'd be looking for. Banks in particular have been very weak. It's just not a great sector to me right now. It's not something I want to mess around with. Over in the industrials, much like the Dow, had a very nice gap on the open, ran to the upside, really kind of gave away some of those profits off of those highs, and closed, of course, higher than we were yesterday, obviously, with that gap. Looking pretty good overall from a technical point of view. We talked about this last week as a potential pullback. Obviously, maybe it's not ideal for us as traders that it gapped open, maybe jumped over some orders that we had in place or whatever. But it was added confirmation that we weren't crazy people looking at it from a pullback point of view, right? Now we know that, this is in fact a low point that we can trust. We've seen some upward movement, good upward movement at that overall. So we are, as long as we hold this support level until things change, I would say we are in a pretty bullish situation over in the industrials. At least that's how I'm going to be looking at it. Tech was able to, of course, with the market gap to the upside and close right around that all-time high point on the sector spider ETF. So much like the NASDAQ, I'm going to monitor the NASDAQ high, the overall market highs, but I do like the break. The only thing that really concerns me is so much weakness in small caps. It's one thing that they're not hot, but boy, that was a lot of weakness today. Market breaking out, when the major, indexes, the Dow, the NASDAQ, the S&P, breaking out with the rest just being flat, fair enough. But with it being so bearish, that's kind of weird. I don't like to see that. But that's what I have to work with today, whether I like it or not, right? We have to go with what we have. Moving over to the staples, continue to kind of use that 50 moving average kind of as a resistance level. I really think that the line in the sand is 53.50. If that breaks until the chart changes the way it looks, I would say that is a bearish signal. Until it does, I could see the case really on both sides. If it breaks above the 50, be a buyer. If it shows downward movement off of the resistance, be a seller. There's just not a lot of room between where we are and that 53.50. So I have a hard time seeing being great risk to reward ratios, generally speaking. Obviously, there will be some interesting setups on the individual stocks. But really, that's where we are right now. We are holding support. You have to respect that. This 50 is definitely causing us trouble, as we know it can. We know it can. That's why we watch it. That's why we keep it on our charts, right? We don't live in fear of it, but we definitely keep an eye on it. Over in utilities, they really flattened out today. I was running some scans a little earlier, and there are a lot of companies in the utility sector on the S&P 500 that are just testing or just about to test their 50-day moving average as resistance. I think they do a few over on the Tackle Trading Twitter, ticker symbol wise. But I really noticed there are quite a few that are going to be challenging that 50 as resistance, which I wouldn't want to do if I'm a bull. I think this is lining up for a potentially interesting bearish retracement as we move into the next few days. That's my personal opinion, at least. Healthcare continues to be healthcare. Was looking very strong early, did sell off of its highs pretty good, still closing positive for the day, but did sell off of its high points, much like the overall market, but really nothing to see here, nothing to say that we haven't said a lot of times. And until we stop saying it, we're going to keep saying it, right? And that's all right with us. Discretionary continues to struggle at resistance. With making an honest effort, maybe in the early goings today before giving it back and really selling off. Very bearish candle here today. But again, at resistance, that makes sense, right? I do think we continue to be, in a range-bound situation here. And so I will continue to act accordingly. But I'm not surprised to see resistance hold, especially once the market started selling. Nobody wanted to push stuff through resistance, it didn't seem. Things that broke early kind of held up okay, but things that were trying to break before the market started taking profits, I didn't really notice anything that was able to buck that trend. Over in the real estate sector, we started to see, some nice upward movement on Friday, but we saw sellers come right back into it today, closing near the day's lows. It's really hard to get buyers to get excited about things that have been struggling and showing technical weakness, right? It develops on the intraday as short sellers get out. That develops into some intraday bullish signals. And then all of a sudden, those signals go away and there's no longer term or swing trading type bulls. So the intraday traders start going the other way. I think we have to look at it this way. Personally, as a sector, it is just showing a lot of weakness and not a place where I think the bulls want to be playing right now. Lastly, we have our communication services. It basically popped into that little trend line. It was kind of a back and forth day. You saw Netflix briefly try to break out of that 380 that it's been fighting with. I've been kind of a weird situation over in the new communication services sector, but we did kind of pull back into this trend line that really is the information that we have to work with right now. That did hold. We certainly bounced off of the intraday lows pretty effectively off of the intraday lows. Obviously not the greatest candle in the world by any means, but I do think, right now there's just a lot of conflicting stuff over in that sector. You're seeing some things like Facebook showing a lot of weakness. You're showing things like Charter that have actually been doing pretty well. So a lot of back and forth, it seems to me right now over in that new communication services sector. As we move into our dollar, we are eking closer and closer to that resistance level. We know how important that has been. We did have another solid showing here today. No two ways about that. But we are about to challenge what everybody knows has been a challenge. So let's continue to monitor that 95.50 area, whether that's a place where you're taking profits, constructing bearish trades, looking for bullish breakouts. That's clearly an important number, right? And we definitely want to respect the history there. But another solid day as we inch closer to that resistance level. Over in the metals market, really not a whole lot to see. Over in gold, as we continue to do what gold does, it kind of had a little action, late last week, but never really enough to, get the bears on board. And so we really find ourselves in the same spot as we've grown also very accustomed to. Our silver, of course, when we spoke last week, last Friday, it had broken out, ran into the 50, that acted as resistance, and it really got pushed down off of that resistance today. It did work towards that old resistance zone and bought up a little bit off of those lows. I don't love the chart. I get the bullish argument, especially if we can break above that 50 moving average, if we can break above this swing high at around 15. I get that would be a bullish signal. Now, forgive me, I'm not very good at drawing straight lines, but that will make the point. I get it and I see it, and I wouldn't argue against it. I'm just having a hard time getting on board with that. But that is at least what I would need to see to get comfortable as a potential bull on silver. But at the same time, forget about me. We have, been able to break resistance. We have technically made higher lows and some higher highs. We are fighting with, we moved the 50 as resistance, and that's no easy thing to break. But we are seeing some positive things. I just don't trust those positive things personally. So that's just where I find myself, at least. Over in our natural gas, another strong day over there after closing kind of flat last Friday. Really a nice bounce back day today. We're continuing to try to break out of that resistance level. We certainly are off to a great start here one day into the trading week. That is for sure. Looking very strong, very extended, overall, but still looking very bullish, of course, regardless of whether or not it's extended, it's still in a pretty bullish situation. I think we can kind of look at this little low that we put in back here as a support level. That's what I would be doing right now. Obviously, I'd like to see it above 3. It's been doing a pretty good job staying above that psychological 3 number. But from a technical point of view, I do think this swing low is kind of as long as we stay above that, we're bullish, at least until new things develop. So we remain very strong over there. And of course, crude very strong as well. Building off of Friday's candle Friday, we took out that little intraday 72.50, very strong candle. A lot of carryover today, more carryover than I would have expected. But certainly if you're a bull, you're not complaining. We knew that we really didn't have a lot. We talked about it at 72.50 to that 74-ish area. There really wasn't a lot of resistance, and it really made up that very quickly. What really is kind of surprising is it got to resistance and didn't care at all and just pushed right through. So very strong showing, definitely a breakout, very extended. So that doesn't necessarily mean we're all jumping into crude. Some people don't like to jump in after that much, that big of a move. They'll wait for a pullback or whatever, and that's fine. But we're just here to make sure that we understand where things are at, right? And we have a hard time making a bearish case on crude today. Showing a ton of strength, breaking resistance, having a really good time. So a very strong day over in the crude market for sure. And that, ladies and gentlemen, is where we find ourselves. So there's a couple things to keep an eye on. Watch those highs on those major indexes. The Dow, the S&P, the NASDAQ, we're all, it's looking like we're going to try to break, or fight through all of that. We'll have to see who wins, of course. But we all have that all those indexes have that overhead kind of sitting right on top of them. But there's definitely opportunities from my point of view on both the bullish and the bearish side as we work into the week of the market. So make sure you are, of course, following your trading rules and not chasing after things. I know my friends here at Tackle Trading don't do that. So just a friendly reminder to all of us, myself included, right? With that, ladies and gentlemen, as always, it is my pleasure, and I certainly appreciate everybody's time. Be sure to subscribe to the Tackle Trading YouTube channel and hit that notification bell so you can be alerted to any new videos that we're doing over here, and follow us over at Tackle Trading on Twitter to keep up with some of the things that we're watching out for and following throughout the course of the day. If you did enjoy the market recap, it is always helpful and appreciated if you give it a thumbs up just to let us know that you find it helpful. And with that, get out of here. Happy trading, and I will see you in the next one.